Good morning from ORTEX. Today is Friday, September 23rd, and these are your data highlights. The SEC is not expected to crack down on payment for order flow, according to a report from Bloomberg. The securities regulator has been examining the controversial practice for over a year, as critics argue that payment for order flow presents significant conflicts of interest that harm investors. Payment for order flow entails market makers and wholesalers paying brokerage firms to route customer orders to them for fulfillment, and has paved the way for $0 trade commissions at major brokers. While major brokers like Fidelity and Charles Schwab engage in the practice, Robinhood has become emblematic of payment for order flow since it is Robinhood's primary method of monetizing trading activity. Robinhood shares initially jumped on the news before closing in the red due to broad market weakness. ORTEX analyst data shows a consensus target price of $11.50 for Robinhood, representing 19% potential upside from yesterday's close. Aerospace giant Boeing has agreed to pay $200 million to settle charges brought by the SEC over the 737 MAX crisis from 2018 and 2019. The plane featured a flight control system known as MCAS that was faulty and led to two high-profile crashes that killed nearly 350 people in total. The SEC alleged that Boeing and former CEO Dennis Muilenburg knew that MCAS posed a safety risk, yet still attempted to reassure both consumers and investors. Those statements were materially misleading, according to the SEC, and Muilenburg will separately pay a $1 million penalty. Analysts are bullish, with 18 buys, 2 holds and 0 sells, and a consensus target price of $215.56. Make sure to subscribe and come back every weekday for interesting data highlights from ORTEX.